Hi everyone, today I'm going to be covering a popular topic on YouTube and actually a scenario I'm currently going through so I can talk about my experience as well. Should you buy in cash, lease, or finance a car? I'm going to be talking about new cars only. Funny enough, I'm not finding much of a discount on used cars. Like I saw a $3,000 saving, but then not knowing the history or the maintenance or how the previous owner upkept the car, I decided to go new. This is going to be a longer video. The first half, I'll break down the pros and cons of each option to help you make an informed decision. Then the second half, I'll show you how to play around with an online build and price tool so you can see the actual numbers. This will be a numbers heavy video, and I know many people tune out when I go deep into financials, but trust me, it's worth it. Please like the video, comment, and subscribe to the channel for the algorithm. First off, let's understand what buying and leasing actually means. When you buy a car, you usually have three options. Buying in cash, which is paying the full price of the car upfront in cash without any loans. Leasing, paying a monthly fee to use or rent the car for a specific period, usually 2 to 4 years without owning it. And lastly, financing, taking out a loan to pay for the car, making monthly payments until the car is paid off, until the car loan is paid off, at which point you own the car. Now let's discuss the pros and cons of each option I just mentioned. The pros of buying a car in cash: no monthly payments. Once you pay for the car, it's yours, no stress or burden of monthly payments. No interest costs. You save at least 5 to 6% per year of interest, which is what I've seen recently. This can add up over time, which we'll see in the real life example I did at the end of the video. Potentially lower insurance costs. You can opt for a less comprehensive insurance policy when you own compared to leasing, which requires a heavy insurance policy. However, I always advise loading up on insurance even if you own, but that might be a topic for another video. Lastly, full ownership. You own the car, you can modify it, sell it, trade it, or set it on fire if you want. The cons of paying in cash is a higher upfront cash cost. I mean, you need a significant amount of cash upfront, which is not possible for everyone or anyone that I know. Depreciation, it is a killer. Everyone knows that cars are a quickly depreciating asset. It goes down in value the more you use it. You could be underwater as soon as you drive it off the lot. If you pay $50,000 for a car and then the next day you decide you don't like it, if you try to sell it, it's now considered used. You might only be able to get $47,000 or $46,000 the very next day. And I'm just speaking in hypotheticals right now just for this example. Lastly, it is opportunity cost. The money spent on the car could potentially earn higher returns if you invested it somewhere else. If financing your car only has a 2% interest rate, you could get 9% by investing in the stock market. So you could be indirectly losing money in terms of opportunity cost if you paid in cash versus investing. Now let's look at the pros of leasing. Lower monthly payments. Lease payments are always, from what I've seen, lower than financing since you're only renting it and you're paying for the car's depreciation over the lease term. I found leasing to be 30% lower in monthly payments on average, which is a huge cash flow difference. Less maintenance. Lease cars are usually under warranty and maintenance are covering all major repairs. Granted, the maintenance is usually built into the monthly payments, so it's not free, but it feels that way, and it has less financial surprises since you've prepaid it. Lastly, getting a new car every 3-4 years. If you want the luxury of a new car every few years, leasing gives you a worry-free approach. You can just give the car back. You can avoid dealing with selling it, haggling, finding a buyer. Just give it back and potentially get a new one. The cons of leasing are pretty big. No ownership at the end of the lease, you don't own any asset, and you likely don't have any equity. I do have a friend that leased a Porsche and actually had equity at the end of it since the value increased during COVID, but that's the exception, not the rule. Mileage restriction. Leasing comes with a max amount of mileage. Since you're renting it, they don't want you to drive 100,000 kilometers a year, completely ruining the car. Exceeding the mileage usually comes with hefty fees. I've seen as high as 25 cents per kilometer. However, the overage is usually waived if you lease another car with the same dealer. I've done this. I went over my kilometer allowance, but they waived the cost if I got another car, and I did. Wear and tear charges. You could potentially be charged for any excess damage beyond normal wear and tear. Again, this could be waived if you get another car or promise to get another car with the same dealer. Lastly, no flexibility. Ending a lease early can be costly if you change your mind. You can't customize or modify the car without penalties. That being said, it's only if you get caught. I modified the engine of a leased car, then just took off the modifications when giving it back. Like, who cares? Okay, on to the third option before we go through the financials. The pros of financing a car. Ownership equity. This is a very mild benefit. With each payment, you're slowly building equity in the car. Once it's paid off, it's yours. Right now, my car is paid off, but it's probably worth $25,000. So I have that as an asset, a depreciating asset, if I ever need it. No mileage restrictions. Unlike leasing, you can drive as much as you want without penalties since it's yours. And customization. Like paying in cash, you could modify it, sell it, trade it, or set it on fire if you want. The cons of financing. The monthly payments are super high. You're essentially paying off the entire car plus interest over 48 months or 60 months. It's a lot, and we'll see that number later. Interest costs. Financing is a loan. With every loan, there's interest, and it could severely increase the cost of the car, adding 15 to 20% on top of the actual cost of the car, again, which we'll see a little later. Depreciation. Cars lose value over time. They lose the most amount of value in the first few years, and then it tapers off. So if you need to sell it, you'll likely be underwater and you have to pay off that balance, which could be huge. Maintenance costs. Unlike a lease where most of it will be covered, once the warranty wears off, which is when you actually need it the most, I guess all the costs fall on you. Now that the boring stuff is out of the way, I'm going to spend some time playing around with an online calculator showing you the actual numbers. Now, if you want to just jump onto any website, the car that you want or the dealer that you want, they always have a build-in price section. You click here, click on the car you want. Let's go M2. Select the options you want and something will pop up where it shows me the financing options. There we go. Now, what I want you to notice right away, it gives you like the monthly payment and everything you're looking for. If you take a look at here, standard lease, interest rate 5.49. If we go to finance, it's 6.99. So you usually get a big, I was gonna say a small discount, but this one's 1.5%. It is pretty big, which can add up over time. I want to show you just the lease option. You know how I said it's renting for a few months and you're basically paying renting for a few years and you're basically paying the depreciation over that time. This is $975 a month. And then the buyout value at the end is $38,000. So you're going from an $80,000 car, you're paying for $42,000 in depreciation. Let's play around with the amounts you're gonna pay at the very end. So let's say you put $5,000 down over 48 months, and then you wanna buy it out at the end. So we go over here. So 975 times 48 plus 38,073. What is happening? You're at $84,000. You know what? This is wrong. We have to add in our sales tax. That is wrong. Let's do this again. 102 times 48. This is what you're paying over 4 years plus 38,073. So $90,969. And then how much of that are you paying with interest? Over here, total interest charges over the term, $12,167. Now you see here over 4 years, the monthly payment is $1,102. If we switch to finance, because you're paying for the entire car, look at this, over 60 months. So if you wanted the same term, you're paying $1,982. Now there is no tax button here because you're already paying the tax, you're already including it in here. Now let's look at the interest over the life. It is $12,354, around the same that we paid previously. Look at the total obligation. The car with sales tax is $87, but with interest, which is $12,000, you're paying almost $95,000. Now, what else I want to show you is, if we go over, so let's say, what was this? 95,157, and this is how much interest you're paying. Now, if you're saying 1982 is too much, per month and you want to extend it longer, nothing really changes. The only thing you have to pay more is interest. So your payment lowers, which is good, but you're paying more interest over time. Your payment just went down $300, but look at the total payment. It just went up $3,000. So you went from $95 to $98 total for the car, which is a lot. And then you're paying $15,000 in interest. Now let's go back to lease for a second. Sorry, I'm all over the place. Something happens when you're paying the down payment. So down payment is essentially saving you the interest over the 4 years. It doesn't save that much. I'll say around $800. So let's do this for now. So here with 0 down, we're paying $1,091. $1,091 over 4 years, $52,368. If we put a down payment, it reduces our payment. 90 bucks. What was it? 110 bucks. So we're going 975 times 48 plus 5,000. So you see here, the total cash outflow was 51,800 when we put 5,000 down. When we put 0 down, it was 52,000. Now let's see if we go 10,000. So that's a lot up front, but then our monthly payment is lower, which is great. So we'll go 859 times 48 plus 10,000. So we went from 52,368 to 51,800 to 51,232. So it's looking like every $5,000 is saving us the interest of around $600 or $570. Another thing I want you to take a look at is the kilometer allowance. You know how I mentioned you're basically renting and there's a kilometer allowance that you get, mileage limit. They ask you to estimate how much you think you'll be driving over each year. So if we start here with 8,000, look what happens to the monthly payment and look what happens to the residual. Because we're driving less, our payment goes down slightly and then our residual goes up because there's less wear and tear. What happens from 830 and 39,000? If we go from here to the max, we just went up $72 per month, but then we went down $4,000 in residual value. So you're not really, if you want to buy out the car, you're not really saving much by lowering the amount you choose. Because in the end, here, you just saved like $70 over 4 years, but your residual value just went up as well. So you might end up being in the same scenario. So I don't really think playing around with this number will make a big difference. One thing I didn't get into is the owner finance, which I don't really like. I don't think people should do. You basically pay a mix between the finance and the lease payment, so $1,313, and then at the end, there's like a balloon payment. You have to pay this amount at the end. I don't think this is the best option for anyone. Instead of doing this, I would rather you lease and then pay it off at the end, which is a slightly better option. So owner finance, is there anything I want to show you here? It tells you the amount you'll be paying, the interest payment summary. I like how they summarize it here. Very nice. The lease option, it's pretty straightforward as well. The max is 4 years, lower interest payment. The down payment helps a little bit. So if we go just including the sales tax, you're saving about $500 a month. The monthly does help. One thing I didn't take into account is what you want to do with the $38,000 at the end. You might end up financing this as well. After 4 years, you have the option to give it back or pay off this amount. And then the leasing option might end up being more over time. That's all I want to show you when it comes to numbers. I hope that made sense. Now, how do you actually make a decision? I gave you all the pros and cons of each option, but in the end, the best choice depends on your current situation. Do you have $30,000 to buy a car outright? If not, can you deal with the high monthly payments to finance? If not, are you okay with technically renting a car for a few years and giving it back? Please keep in mind, this video is buying a car for personal use. I haven't factored in the business use of a car or writing it off as a business expense versus personal. That's a topic for another video. Let me know if you're interested in that kind of topic. That might be next. Let me know if anything was unclear. Thanks for watching and tune into the next one.